Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings in the fourth quarter of 2022, and that stock is AMD. And we can see that over the last year, AMD is down around 23%. In the same time period that the S&P 500 is down around 10%, so they are underperforming the market at the moment. But over the 5-year chart, they are doing extraordinarily well. They're up around 600% in the same time period that the S&P 500 is up only around 40%. So they're completely dominating the market over the 5-year chart. And so in this video, I'm just going to look into some of the recent news that came out surrounding AMD, and then also figure out if it presents a good buying opportunity at the current share price. And so right here we can see in this article, they point out that there are a couple of things that some investors ought to know about AMD that could make it a pretty attractive investment. In particular right here, they give us some key points. AMD is often compared to NVIDIA, but the 2022 results might make it a better buy. Also, they're in a solid position to capitalize on the growth in the virtual reality market at the moment, as well as the AI race. And so we'll see what exactly they're talking about in this article. In particular, they point out that in 2022, their stock plummeted 55%, but the company's shares have steadily risen 26% since January 1st. We can see in particular what they're talking about here. Since around January 1st right here, their stock has risen from $64 per share to $82 per share. So they could be in the process of making a recovery at the moment. On top of that, if I scroll down here, they point out that last year was really difficult for all companies in the PC market because worldwide shipments of GPUs fell 42% throughout 2022. But that being said, AMD ended up doing a little bit better than NVIDIA in this area, mainly because AMD has 8% market share in the consumer GPU market and NVIDIA has 88%. So AMD is less exposed to the GPU market and to the downturn that occurred in 2022. And as a result, in 2022, AMD's revenue rose 43% year over year to $23.6 billion, while NVIDIA's only increased 0.2% to $26 billion. So as we can scroll, if we see right here as we scroll down, they point out that AMD's diversification essentially of revenue meant that their PC-centered segments suffered last year, but they were in spite of that, they were able to pivot their business to more lucrative segments like data centers and embedded products. And the data center and embedded product revenue segments of their company grew 169% year over year to over $10 billion. And so they could be a better buy than NVIDIA, mainly because of the fact that they have better diversity and they're more reliable than NVIDIA. In particular, they point out this second point that AMD is a leading name in the virtual reality market. This market is estimated to be worth around $21.8 billion in 2021 and is projected to grow compounded annually at about 15% through to 2030. And so AMD could be the producer of the hardware that makes it necessary to run this VR software. They've already partnered with Microsoft, HTC, and Meta platforms for their respective VR headsets. So definitely interesting to see where that's going to go. They could be the main hardware producers for the VR market. In terms of artificial intelligence, this market in 2022 was valued to be around $136 billion, expected to grow at around a 37% compounded annual growth rate through to 2030. And AMD could also be the hardware provider for the AI market, providing the GPUs and the processors that are necessary to run and develop AI software, making them pretty attractive to companies like Microsoft, Amazon, and Alphabet, the parent company of Google, all of which are right now competing to be crowned the king of artificial intelligence. And lastly, AMD's CEO, Lisa Su, revealed in the fourth quarter of 2022 in an earnings call that we can definitely expect to see additional AI acceleration coming in AMD's server portfolio. So a lot of interesting news coming out around AMD surrounding the virtual reality and AI market. And on top of that, based on the fact that they are more diversified, they could be presenting a better buy than their main competitor here, NVIDIA. And so right here in their income statement, we can see they're comparing 2020 to 2021 and 2022. net revenue increased pretty substantially from 2021 from 16.4 billion to 23.6 billion. That's an increase of 44% year over year. But that being said, net income decreased from 3.1 billion to 1.3 billion dollars. That's a decrease of 58% year over year. And we can see the main reason why that was because of amortization of intangibles at $2.1 billion expense, which didn't exist in 2020 and 2021. And they also they invested a lot more in R&D expenses at $5 billion compared to $2.8 billion in 2021. And so right here we can see their balance sheet. We can see total assets are up from 12 billion to 67 billion, mainly as a result of an acquisition here that they made in 2022 that increased goodwill and related intangibles from the company that they acquired. We can see the majority of their business is financed by equity. They have $54 billion in total equity. So that means they probably only have around like 13 billion of total liabilities. And a lot of that is sitting in additional paid-in capital at $58 billion. And so lastly, right here, we can see their cash flow statement comparing 2020 to 2021 and 2022. Operating cash flow increased slightly from 3.52 billion to 3.56 billion dollars. And then we can see they repurchased common stock of 3.7 billion in 2022 compared to only 1.7 billion in 2021 and no repurchase of common stock in 2020. So they are prioritizing repurchasing common stock a lot more in 2022 than they were in their past operating years. So right here we can see this discounted cash flow model to figure out the intrinsic value per share for AMD. Yahoo Finance is estimating that the company is going to grow at around 10% compounded annually. They had around $3 billion of free cash flow in their most recent full year, around $2.9 billion of cash on their balance sheet, and $1.6 billion worth of shares outstanding. That puts their, or 1.6 billion shares outstanding, my fault. And that puts their intrinsic value per share at around $32 per share, which means that at the current share price, they are not trading below intrinsic value per share based on these estimates from Yahoo Finance. And so right here, I compared them to some of the competitors in their industry, Intel and NVIDIA. We can see in comparison, it looks like NVIDIA has the highest profit margins and return on assets right here, but they also have the highest PE ratio, which could mean two things. One, it could mean that they're overpriced, or two, it could mean that investors expect that NVIDIA is going to grow at a much faster rate than AMD and Intel, which is why they've already priced the future growth into the current share price. And then lastly, AMD doesn't pay a dividend. Intel pays the highest one at $1.46 per share. So from a competitor analysis perspective, it looks like in terms of profit margins, NVIDIA would definitely be the best buy. Intel would be the best buy for the dividend. But we also saw that from those articles that there are a couple of reasons why AMD could be the best buy for reasons outside of these financial ratios. But if we're solely looking at financial ratios, it looks like it probably goes to NVIDIA. And to end off the video, I wanted to compare AMD to some of the other companies we've looked at in the past. AMD is currently trading at a little over almost 3 times their intrinsic value per share right now, trading at $82 per share, and the intrinsic value was $32 per share. So they didn't make it onto the share price to intrinsic value table here. General Electric and Albertsons are still the only 2 companies trading below intrinsic value per share on that table. In terms of growth rate, AMD had a projected 10.12% growth rate for years 1 through 5, so they do come in 8th place on the growth rate table. GE is sitting at the highest at 44.5% estimated growth rate from Yahoo Finance. In terms of profitability ratios, AMD had really low gross profit and net profit, so they made it to the bottom of the gross profitability table at 36%, but they did not make it onto the net profitability table because their net profit was 5%, and that's not enough to beat Nike off the table at 12.92%. Lastly, This is a place where, or a table where AMD actually flourished. They had pretty good stock performance over the last 5 years. We saw right here they're up around 604%. So the only company on the list doing better than them was Tesla at a 733% return over the last 5 years. And you can see that Tesla and AMD are really distancing themselves from the rest of the competitors. Microsoft is the only one that comes close at 191% over the last 5 years. So in terms of comparing them to the companies we've looked at in the past, in terms of stock performance, they're doing very, very well. But in terms of all of the other tables, they're really not doing that well. They either didn't make it onto the table at all, or if they did make it on the table, they made it pretty low on the list. In terms of competitor analysis, looks like Nvidia has the best financial ratios here, but AMD does seem to have a more competitive PE ratio compared to Nvidia's. Could mean that there's better growth prospect for Nvidia in the future, but it could also mean that they are currently overpriced, and then they are not trading below intrinsic value per share right now based on this discounted cash flow model. So I'm not too sure what to make of Nvidia at the current share price. Obviously, based on different parameters and variables, you could make the case that AMD is a really good buy right now, especially based on the facts that we looked over in this article. So let me know in the comment section down below what you guys think of AMD. Is it a good buy at the current share price right now? Let me know what you guys think in the comments down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.